Here is your Bull and Bear stock of the week.
A farm machinery manufacturer and a toy company make up this week's Bull and Bear of the week. And Shiraz Mian, research director at Zacks Investment Research, here with us once again to fill us in on the details behind these picks, behind why they're a bull, why they're a bear. So Caterpillar CAT is the bull, and they've actually had some pretty good news on them recently.
They do. They came out with quarterly results. Was it earlier this week?
I believe so.
And these were unlike results that you would associate with an industrial company. These were like Apple-like numbers.
Yeah.
They blew past expectations, guided higher. And that is the primary reason why we have them as the bull this week. It reassures us that this major machinery supplier, mining, construction, they have exposure to all these cyclical end markets, and it's a global operator, and there have been these questions about emerging markets, about Europe, about the US. And then we have this supplier comes in and not only beats, but guides higher and reassures us that the growth outlook for these geographic markets and these other end markets may not be as bad as many in the market have been fearing. And that was very reassuring about China, about the rest of the emerging markets. So it's a play on emerging markets, as we have all along known. The secular need for infrastructure all over the world, and Caterpillar's role as a key supplier for that demand has been the key positive in the Caterpillar story. On top of that, there is another kind of a very early signs of some improvement, or call it green shoots, on the domestic housing front as well. So that is another potential positive, which is not even fully reflected in Caterpillar's earnings and revenue numbers at this stage. So the global story plus potential leverage to stability and improvement in the U.S. construction industry are the primary themes that will carry Caterpillar for a long time. The stock has done real good lately, but I think there is more upside there.
What you're saying is the little bit of improvement in the construction industry then reflects the need for bigger machinery.
That's exactly true. The last 3-4 years, as the housing market has been in a downturn, all the contractors have literally been sitting on their hands with machinery in pretty bad shape, and even a very modest improvement in that end market will have a pronounced impact for a key industry player like Caterpillar.
Yeah, it's sometimes hard to remember that they're not just a farm machinery maker anymore.
No, they're not. They have a very strong presence in mining, in all of these construction projects globally and particularly in the U.S. So the company has been able to produce these impressive results with its two core products, particularly two markets in the U.S. and Europe being effectively in a depressed state. So it has not reached its peak earnings power yet, and there's more to the Caterpillar story than we have seen up to now.
Okay, quickly, the toy company is JAKKS Pacific. It's a NASDAQ stock.
That's right.
Now, I, for one, like toys, and I was kind of disappointed to see a toy company make the bear side of the column.
Yeah, these are these operators. The holiday season is typically the make or break season for them, and the latest one was not very kind to JAKKS. And that is a key reason for why we have them as the bear. There are some positives in the JAKKS story. They have a very clean balance sheet. They recently initiated dividend. They're buying back their stock too. But the negatives outweigh those positives. They don't have a compelling enough product portfolio. The company came out in late December, just a few days before Christmas, on a Friday evening, and pre-announced how bad their fourth quarter was. and
not a good time.
that is never a good time. Subsequent to that, estimates have been steadily coming down for this year, and we don't think it is just purely a fourth quarter issue. The company does not really have a good enough and viable enough plan to turn around its fortunes. There was a private equity offer for this company early in the fall. Board rejected it. That private equity offer, my understanding is, still stands. So that could provide some downward protection to the stock price, but overall the company's outlook doesn't look good.
All right, we appreciate that information. And don't forget, you can take a glance at the Bull and Bear of the Day. And we post those each day for you, each trading day, on Zacks.com. So if you're not there already watching this video, go over to Zacks.com. It's right on the homepage. Bull and Bear of the Day. See a little bull icon, little bear icon. Can't miss them. With Shiraz Mian, I'm Terry Ruffalo.